Hello and welcome to The View from the IADB. I'm joined by Jingdong Hua, who is the treasurer of the IFC. Thank you for joining me. We were talking earlier about the importance of developing infrastructure in Latin America, and particularly the importance of developing capital markets to fund these projects. What can Latin America learn from the experience of this side of the world where we are now in Korea?
Well, Silvia, it's a great pleasure talking to you. Since we're in Korea, I think you have first-hand experiences how developed the infrastructure is in this country. And indeed, even in Asia, which is growing with a lot of vibrancy, the infrastructure funding gap is still very big. For example, the Asian Union Bank has a number that says till the end of the decade, 2020, Asia needs about another $8 trillion of infrastructure financing. So after all, on average, Asian countries put about 6% of GDP into infrastructure. And in the case of Latin America, it's 2 to 3%. So
it's a big difference. But I think there is a feeling that some of the governments in Latin America are really raising the game and trying to develop more and more programs to build the infrastructure. Would you agree with this? And what governments do you think are doing better and which do you think should really improve more?
Yeah, I think the government clearly recognizes the criticality of infrastructure as an engine of economic growth, because that's the foundation for private sector to thrive, to build up a logistic network so that you can build a manufacturing value chain, as you can see in East Asia. The problem is finding bankable projects and finance those projects. For example, again, the 8 trillion, which means it's way beyond what the government can finance through its tax base. And therefore, we really have to look for capital market-based solutions. That is, how can we unlock the tens of $trillions of pension and savings institutional investment in OECD countries and interest them in investing in bankable infrastructure projects in Latin America. At the same time, within Latin American countries, there is a growing and big pension industry that is looking for a good investment vehicle. And therefore, if we could structure infrastructure project financing with proper regulatory requirement, with proper risk mitigation, I think we can unleash tens of billions, hundreds of billions of dollars of financing to make infrastructure building work.
What is the IFC doing to help governments promote these initiatives?
Well, we have done quite a number of things. I'll give you an example. Recently in India, we are able to tap offshore Indian rupee market out of London and immediately use the proceeds that we issued to finance an infrastructure bond by a local bank in India, and therefore directly connecting international savings to domestic infrastructure financing denominated in local currency. So I think in Latin America, we have been active in a number of local currency bond market, including Brazil, Mexico, Peru, Dominican Republic, Costa Rica. And we need to double that effort, and we need to do more local currency financing, especially for projects where revenue base is in local currency. And we have all seen the recent volatility in currency with the dollar strengthening. Local private sector companies who have borrowed dollars are suffering, right? So in that sense, I think one of the fundamental financing requirement has to be you want to finance in the currency of your revenue. And that is a good way to connect with domestic pension and insurance and bank money into infrastructure projects.
So this is already happening in some countries. Chile probably is a good example. Where else do you think this will really take place in Latin America?
Chile indeed is a good example. Another country that has big ambition is Colombia, where they are pushing out through their 4G initiative over $20 billion worth of infrastructure building. And there, I think, we are working towards a capital market solution to mitigate construction risk, right? Because for institutional investors, when they invest in a project bond, they just want steady cash flow. But what worries them is whether the construction will finish on time, whether there would be regulatory risk pertaining to the building, the construction phase. But once construction finishes, then whether it's a toll road, whether it's infrastructure that has steady cash flow, it becomes a revenue generating source for those institutional investors. I think IFC, together with Inter-American Development Bank and other multilateral institutions, we can play a key role in wrapping construction risk to an acceptable level to institutional investors, especially domestic pension funds. And that will demonstrate our ability to connect savings with infrastructure financing.
Very good. Thank you very much for your comments.
Thank you.